What up, everybody? Welcome to another edition of Ask the VC with Jeff Ransdell. He is the founding partner and managing director of Fuel Venture Capital. Jeff, how you doing today?
Spencer, I'm well. I missed you, my friend. How are things up in Michigan?
They're finally warm. Not that you
I see you're still wearing a sweater there, though, brother. I don't know.
Actually, it was cool. It was on the cool side this morning.
Yeah.
You got me there. All right, Jeff, it is a great day to have you on because we're talking about fintech. The theme of today's show is fintech, and we just had arguably the biggest fintech IPO ever. Well, not
unbelievable.
Not technically an IPO, direct listing ever. Yeah. Coinbase, which we're watching right now, if anyone is watching this with me, it is now trading below the opening price. If you care, Jeff, let's get your thoughts on Coinbase first, and then we'll go to the rest of our agenda here.
Well, I listen. I love what's going on. I'm a big investor in fintech. I think everybody obviously knows I'm also a huge proponent and investor in technology and anything that really I think is going to change the way that we're doing things. I love what's going on with Coinbase right now. I mean, if you really kind of know the market, she opened up at 99. Where's she at right now, Spence?
Well, we are at 378.
378.
Well, so on the price, that'd be a market cap of I don't know, 90 million, 90 billion.
Yeah. That's kind of. I apologize. That's what I meant.
Yeah.
So if you think about that, right? I mean, gold. It's worth damn near as much as Goldman Sachs right now. I mean, how long has Goldman Sachs been around, right? So traditional finance, and I really think that that's the theme of our show today, right? The theme is traditional finance, bricks and mortar of the past. And how is technology going to disrupt that? I think Coinbase is a perfect example, especially for your audience and everyone who is a part of your cohort. This is a big day.
Yeah, a huge day. Not the first crypto exchange to go public, but the largest. And as you said, its size and market cap alone is it rivals the biggest banks. Just to compare it, Goldman Sachs market cap of 110 billion. We were there for a moment in Coinbase. It did open at a valuation that would make it larger than the Nasdaq and the New York Stock Exchange parent company combined. So these big numbers here. So I take it you're a Coinbase bull and a crypto bull based on that.
Yeah, I am, but I think more deeper than that is I am a bull on all disruptive technology that is changing the way we used to do things.
Yeah.
I think as a premise to all the conversations that you and I have, I think the one thing I want our audience to really focus in on is because we're always moving so fast, we don't really stop long enough to think about it for a little bit. But if you think about how you interact with the world around you today, it's completely different than it was even 4 years ago. And that is a huge issue from an investment insight. The other thing is we live in a world where, listen, if we don't get what we want in 30 seconds, right? The internet is slow. We're pissed off. We expect that every 6 months, Apple's going to come out with a new device. Literally, people will sleep in the streets in order to be able to get it. That's the world that we live in. And so if we're not seeing these incumbents, if you will, iterating and changing the way that they're doing things, they're going to be in big trouble.
Yeah. So it's a great day to have you on. Last time we talked about the streaming business, specifically the music streaming industry and how you approach that. And we talked about some of the plays that you've made, some of the stocks that you like. And we started off the conversation by outlining, the powers that be. What is the power structure of music streaming? And I want to do the same thing, but for fintech. What is the power structure for fintech? We obviously know everyone knows the big banks, right? But everyone might not have a great understanding of who are the big players. Fintech is a very, very broad term. It encompasses crypto, it encompasses payments, it encompasses compliance, insurance. It's all fintech, right? Trading, Robinhood, that's fintech. Outline for us how you look at and approach fintech.
Yeah, so fintech is a different animal than 2 weeks ago when we were outlining the music industry. By the way, just as a hit the pause button for a second, you and I talked about Spotify being a good buy 2 weeks ago. The damn thing has run up really nicely in the last 2 weeks. I just want to point that out. But let's get back into fintech. Fintech is different in my mind in this way. I think a lot of people think about disruptive technologies and they think that the incumbents will go away. And what I really encourage people to think about with respect to fintech is I don't believe that is the case. If you look at like telecoms, for example, and you go back, for many of our listeners when they were very young, people actually had landline phones in their homes. Now, there were companies that established all those tracks. And then what ended up happening is creators and technology laid and created businesses on the tracks that were laid down by the incumbents. And I look at fintech the same way. So a lot of people say, well, the big banks are going to go away. And in some cases, there might be a few big banks that go away. I personally don't think that. Those big banks are just going to shift. And what's happening, and the really cool thing, and I think you hit it, right? All the different cobwebs that come off of, or the spider web that comes off of those tracks that were laid by the big banks, creators and technology are creating businesses on top of those tracks that have been laid down for years. And really at the end of the day, what it's about is how I started our conversation, which is, these creators are asking themselves, why is this so, difficult? This isn't how I want to consume. This isn't how I want to interface with my payments, et cetera, et cetera. And they build companies on top of these tracks that have been laid by the incumbents. And here we have an entirely new, hundreds of different fintechs that we can look at that are disrupting the space.
Totally. And I'm glad you mentioned that, because there was a very clear shift. Benzinga has been doing an annual fintech conference for like 6 years now. And it started off, or maybe 7 years now at this point. It started off with like, there was this attitude of like, oh, we're going to disrupt the banks. We're going to eat their lunch. Right. And then there was this shift around 2018, maybe, when it was like, oh, okay. We're gonna work with the banks, right? We're not gonna eat their lunch. We're gonna share their lunch, right? And all of a sudden, it became all about partnerships, and maybe that has to do with like the maturity of fintech as an industry. But did you observe that as well?
Yeah, and I think it's a brilliant insight on your behalf, right? It's better to have friends than to have enemies. And I think if you look at PayPal and what they did, in the early days, right? And now if you look at PayPal, they have incredible, relationships. And it all started with Citi. And now look at them. I mean, PayPal is the second largest bank in the United States now. So, again, fintech, right? I mean, look at what PayPal started off at and look at what it is today. And that's another insight that I want all of our listeners to capture. We talked about this 2 weeks ago when we were talking about the music space. And I made the comment that deep technology, when you invest in it today, what that company will be 4 years from now is more than likely going to be very different. And that's because it's a deep technology play. And I've used examples, let's talk about Spotify, one of my favorite companies that's out there. What Spotify was 4 years ago and what it is today are completely, different companies. This is an audio business, not a music streaming business. And so with fintech, it's the same thing. You invest in a PayPal in its early days, thinking it's just a payment system for online purchases, and now look at what it is, in 2021. And it's an incredible and important investment insight for all of us to think about. What is this? If I invest today, what does this have the potential to be in the future?
So let's go back to PayPal for a second here. So like, what is like the thought process on a company like PayPal?
Well, I think that what you're going to see with a company like PayPal is you're going to continue to see, again, my humble opinion, but a lot of acquisitions. Again, there's a lot of creators that are doing interesting things out there. And for PayPal, and a lot of other fintech companies that get to the size of a PayPal, it's actually better to let the creative economy go out and run into the wall, if you will, to do the proof sourcing for them, and to determine, what the end consumer is really looking for. And they have so much money now, it's simply easier to go and buy that company. And as a private investor in technology, really that's one of the edges that I invest into, right? What does PayPal's future look like? If I get on my horse and ride out into the future 5 years, how does PayPal continue to be, competitive and maintain their position so that they don't end up like a BlackBerry? And what are the companies that they can acquire to help them remain relevant and competitive?
Do you own PayPal?
In my personal portfolio, yes.
Okay. I'm curious. Are there other fintech stocks? Because there are, there were not many "quote unquote" fintech stocks a year or two ago, but that number is steadily growing now. Are there other like fintechy stocks that you own?
So like, have you heard of a firm? Went public about
recent IPO.
Yeah, I really like that company. Went public about 12 billion.
Yeah.
It's a buy now, pay later. I think that this is a company that's going to, have the, again, what is this company, 3-4 years from now? I think it's going to be very different than what it is today.
Yeah.
I've got my eye on Plaid. If you remember Plaid, that actually got blocked. It was originally going to go live at 5 billion, purchased by Visa, got blocked. I think it's sitting around 13 billion today. Klarna is another one that I like. There's so many things that are going on right now in this space that it's so exciting. And again, we've talked about this a few times, and it's getting a lot of negative attention right now. But the tech SPACs, I think, are very interesting, especially those who have connectivity to the fintech. I think that fintech is going to play well in the markets, and just like we saw with the firm, just like we're seeing today with Coinbase. I think that those are opportunities for us all to be looking at as well.
Yeah, I'm glad you brought up the SPACs because there are a number of them. eToro, which qualifies as fintech, is going public. Via SPAC, are there specific SPACs or fintech SPACs that you like?
Specific ones, I can't put my finger on a specific one right now. I actually I like most of them, and I think at the end of the day we got to do a little bit more due diligence on their target and understand that target. But the thing that I love about the SPAC fintech is it allows us as investors to get in at an earlier price point before it gets too expensive, and allows us to participate in the wealth generation. That's what I really like about the SPAC space. The public markets are shrinking. Companies are staying private longer, and by the time they roll into the public markets, a lot of the growth's been already eaten up. So that's why I really like the tech SPACs play, and I don't think it's going anywhere. There's a lot of people that are giving it a hard time right now. I personally disagree.
You've got FTCV, which I mentioned, eToro. You've got Fuse, which I believe is that might be MoneyLion. So don't forget SoFi, guys. SoFi IPOE is going to be SoFi. That's going to be big. SoFi is huge.
Yeah, I like that one. Yeah,
SoFi is huge.
Couldn't agree more. This is a good one to keep an eye on. Yeah.
Hat tip to Chris Kachi, our SPAC guru, for that knowledge right there, because I've forgotten about SoFi. Okay, back to overall though. Like, is there a specific area of fintech that where you invest, or where you're more bullish? Because as I said, it is such a broad term.
It is. So let me give you a couple of themes that my firm is actually investing in, and we'll socialize a couple of companies that some people may not be aware of in the private markets, but you can actually start to participate in a little bit as a consumer if you want. So I'm a big fan of the gig economy. So what does that mean? The gig economy is where technology basically connects in consumers with what it is that they're looking for. You think about Uber, right? Uber doesn't actually own the cars. Uber doesn't actually employ the drivers, well, at least in most parts of the world. But what they do is they have a technology that connects someone who needs a ride with someone who owns a car. And ultimately, at the end of the day, what you've done is you've democratized that space. One of our companies that we have invested quite a bit in and are actually in the process of leading a B round is a company called TaxFile. Goes underneath the holding company of Tickmark, Inc. But what TaxFile is it's really democratizing how people get their taxes done and prepare their taxes or deal with bookkeeping or deal with audits. Kind of a boring theme, but it is a theme that is never going to go away. What do they say? It's death and taxes are the only two for sures. And so, a lot of people, we all have to get our taxes done. But what is the way that we, in a new world, a new generation who doesn't want to get in a damn car, drive downtown, figure out where to park, go sit down in front of some 60-year-old CPA and have a conversation about my taxes? Those days are over. So one level of revenue that TaxFile has is the B2C app, which is what we have online right now for all of our listeners and watchers. And really what you can do, we have 3,800 CPAs, certified public accountants, on the platform. So you go in off of the website, you complete an algorithm test, and the test is actually trying to determine what the complexity of your return looks like. And then the algorithm then identifies in our space of 3,800 CPAs, what CPAs actually have the skill sets to complete your needs. And then you connect with that CPA. You can visit with that CPA like we're doing right now verbally. You can call them on the phone. You can do a Zoom meeting if you want to, or you can do it all through text. Now, I've been using this now for 4 years. I have not spoken to my CPA in 4 years. We communicate via text. You basically take pictures of whatever it is that the CPA needs you to take a picture of. You upload it into a secure vault. They do what they need to get done. They send your tax return to you via a text message. You can literally sign the document. Last year, I was in a pitch meeting for 20 some million dollars and needed to get my taxes completed. The CPA sent it to me while I was sitting in the meeting. I signed the damn document and did my taxes over the line. In the past, I probably spent $4,000 or $5,000 a year doing my taxes. I haven't spent more than $400 since I started using TaxFile. That's the B2C side. It has a B2B market. So this is, again, let's get back into fintech. I think that the incumbents and the bricks and mortar of what we think about as the finance world. So it's PricewaterhouseCoopers, it's Merrill Lynch, it's Bank of America. We can go on and on and on. It's the common names that we all think about. But at the end of the day, those large organizations, it's like the Titanic. It's hard to move these things, and it's difficult to do it. It takes time to do it. And again, getting back to what we were saying about PayPal, for these large organizations, it's better to let these creative people figure out what end consumers want and then acquire those to make their businesses better. But in the B2B side, there's a lot of these organizations who haven't adopted to technology. And so what TaxFile does an incredible job of, and I'm going to leave the names out, but if you think about the largest tax organizations in the world, and let's just say in 12 different countries right now, if you are using those organizations to get taxes done, there's a very high probability it's being done on the second floor of this building in Miami, Florida. And we're talking about a lot of different ones. And so there's a great revenue source for the B2B side, which is really just a white label. You think you have this massive organization that's doing the work, but it's actually TaxFile's with what they call work layer that's getting it all done for them. The third piece of TaxFile that I really am excited about, and if you kind of take a look at what just there was a fintech that just went public the other day, which is Compass. And Spencer, I don't know if you've seen that or if you know what Compass is. What Compass has done is they started rolling up real estate agencies around the country, again, applying a technology which would take the end consumer and direct them directly into the retail real estate office. And they just went public. I believe, if I'm not mistaken, it went at about $7 billion. Might be trading right around $7 billion right now. So what TaxFile is doing on that third level of revenue is the roll-up strategy that Compass has just proof sourced. So it's a beautiful, beautiful example of where this could go. And what TaxFile is doing is they're buying CPA firms around the country. They can buy these CPA firms for dollar-on-dollar revenue. It's doing $10 million. They pay $10 million for it. They put down a down payment. The firm usually rolls out the note for about a 4 or 5 year period of time outside of the down payment. And then what TaxFile does is applies its own technology to that organization, just like the large CPA firms that we were talking about in the B2B sector. And they take 80% of the margins on that 10% to the bottom line. So if you're doing 10 million in revenue, they apply their software. They're taking 8 million to the bottom line. It's an unbelievable company that is doing really amazing things in a very boring space. I personally like to identify the boring spaces, right? That's where a lot of people kind of ignore, but there's a lot of opportunity. So that's TaxFile.
Wait, well, first off, what was the ticker? I guess COMP, right, for Compass?
Yeah. Yep.
All right. What was it about like the business model though? You said you like boring things like taxes, but you also said B2B and B2C. So do you look, and maybe this is not just applicable to fintech, could be applicable to anything really, but as it relates to fintech, do you have a bias towards companies that have both the B2C and the B2B model, or one or the other, or what?
It's hard to find. I'm more of a buyer of B2B businesses. I think that the B2B space is typically a less volatile space, less finicky. If you think about COVID, for example, we as individual consumers will do many different things from a psychological perspective than a large business, right? So I like the B2B contracts. They're longer, they're stickier, they tend to be better consumers. The question that you're asking, though, I think is interesting. If you can find a company that has multiple revenue verticals like TaxFile, so it has B2C, it has B2B, and it also has the ability to deploy a roll-up strategy, it's just a hat trick. And to me, you're just lowering your risk categories and increasing your opportunity of upside alpha that really, at the end of the day, we're all trying to find.
Yeah. What about like what other companies? We talked PayPal. You mentioned Visa, which tried to do the Plaid acquisition, and I guess that didn't quite work out, or the FTC blocked it. Are there other companies that you look at in the fintech space, like Square maybe, or I guess you said Uber. Uber has a fintechy application for sure. Are there other like C or are there other fintech stocks that you like?
Stripe, I think, is good. Obviously,
when's that going to IPO? We're waiting for it.
Yeah, you would think any day now, right? I mean, who knows? But I'd keep an eye on that. I like that company. I think what they're doing is extremely interesting. I like the credit card space. We have a company called Recarga Pay. It's the largest payment platform in Brazil, and what's really interesting there is because of the emerging market. So Spencer, we always get caught up, in the United States, it's very developed. But if you go to Brazil, there is a tremendous amount of the population that's actually unbanked. And now all of a sudden you start to apply technology to an emerging market. And this is crazy, but this is really what happens. They've skipped the credit card. So in a country like Brazil, you don't have credit cards. What you have is cash that goes immediately to your smartphone. And that's what Recarga Pay does. And so they have interesting government alliances. They have alliances with insurance companies. They have alliances with grocery stores. Anybody that needs to exchange currency for a good aligns themselves with a Recarga Pay because it's so efficient and so effective. So there's a lot of things that are taking place. You go to a Europe or you go to a United States. Another company I'm super excited about is a company called Curve. It's out of the UK, and it's what they refer to as an over-the-top credit card. So what does that mean? So the average American has 8 credit cards in their wallet, be it a debit card, be it a Visa, be it a MasterCard. And what Curve does is it allows all of those cards to roll up into the Curve. And this becomes the face of the Curve. And it's all managed from your iPhone. And what's cool about it is a couple of features. So again, you go to dinner one night, you pay with your Curve card. And let's say you're taking some of your employees out to dinner and you make a mistake. You put it on the wrong credit card, right? It happens all the time. And you say, oh, that was a business expense. Curve has a patent, which is called time travel. So at the end of the month, when you're reconciling all of your statements and you realize that you've made some mistakes, you can actually travel back in time and change that payment that you made and put it on a different card if you want to. It's super cool. It also, it supercharges all of the credit cards underneath it from an awards perspective. So you're getting the awards and the credits on the Curve card, but you're also getting it on whatever card underneath it that you're pushing the payment to. Something also very cool. The last thing that it does that I really like, and this gets into something, Spencer, that you were talking about. I believe that most every major company in the United States or around the world will have some sort of fintech component to it. How do I make it easier to purchase my goods and services, etc.?
Wait, can you explain how that works exactly? So like it's one card. So how does it know what card I really want to use if it's just the one?
You are going to decide that. So when you let's just say you take your 8 cards and you put it underneath Curve, it's on your phone now. You're going to establish one of them as your default card. But when you're done having dinner or you're at the bar or whatever it is that you're doing and you're in your Uber driving home, you can go to your Curve app and you can move that transaction to whatever card you want to move it to, all on your iPhone. And again, if you don't have time to do it because you're having a good time with your buddies or you're on a date and you want to stay focused, be in the moment, at the end of the month, you can go back and make those changes just like you were going to do right in the moment.
Yeah. That's an interesting concept. I am someone that spends a lot of time every month going through my statements, so it will probably be useful. Let's go back to what you just said though about the international stuff. Is that a bigger opportunity? Do you think when we look at fintech, looking outside the U.S. as opposed to domestically?
I think it's addition to, Spencer. I think there's so many opportunities right now in the U.S. As I said, I think everyone is trying to figure out a way to engage with the end consumer in a way to help them more. If we go back to tax file, for example, I'll give you an example of what I mean. How does a tax file continue to increase its margins? Well, let's say that you get your taxes done on tax file and you're eligible for a return. Now, what if you need that money right away? I mean, most of us would like to have that money today, not wait for the tax return, right? So tax file will actually, the moment that they send your tax return into the IRS, they will deposit your return into your account, obviously for a small fee, but that is a way for tax file to continue to increase its margins by simply providing services that the end consumer really wants. So if you think about, that and you multiply it by hundreds, lots of opportunity in the US, but I am a big fan of emerging market opportunities. And, you look at a Recarga Pay, for example. Recarga Pay is an emerging market company that will end up, my guess, going public in the United States, probably rolled up into a SPAC. And it wouldn't surprise me if it's not in the next 18 to 24 months.
So we've talked tax filing, we've talked consumers / credit cards. When you mentioned Recarga Pay, what else are you involved in, like on the fintech front?
Something that have you ever heard of Tradeshift?
No.
This is a whale. Okay. So you think about procurement, right? So you have supply chain, you have buyers. It's a huge, huge market. So what Tradeshift does, and Spencer, their customer list is unbelievable. It doesn't matter if it's Apple, if it's Google, if it's UPS, if it's FedEx. I don't care who it is. If you throw a name out at me, there's a 99% chance that they are working with Tradeshift. And really what Tradeshift does is utilizing technology, making that efficient and effective, an invoice that goes out, the accounts receivable that come in, issuing, trip credit cards to employees that need to travel to the Middle East or to Asia or whatever it might be. I'll give you a case study. So General Motors, for example. General Motors might order from Bose Stereo, let's say it's $25 million of the product on a monthly basis, or on a quarterly basis. So it's a $100 million service contract for Bose. But when Bose delivers that $25 million worth of goods at the end of the first quarter, General Motors is normally, from a factoring perspective, going to sit on that invoice for 120 days. So Bose is sitting there waiting for that cash to come in, and they probably need that cash in order to buy the supply chain to create the other 25 million that they have to provide in the second quarter. But what General Motors will say is, well, look, if you need your cash in the next 3 weeks, we'll give it to you in the next 3 weeks, but we want a discount. And that discount can range from, in the overall space could be, 10%, could be as high as 19%. And most of the time, these suppliers are willing to do that because they need that cash. But because Tradeshift is actually in between them all, and Tradeshift is actually creating the invoice to send to General Motors and actually sending the accounts receivable from General Motors to Bose, their ability to look at credit scores is much higher than probably any bank on the street. And so now what they're doing is saying to Bose, hey, look, you want your money today? You want your money the moment that we send the invoice to General Motors? Because if you do, we will. And all we're going to ask for is the exact same deal that you were going to give General Motors. You're going to give it to us. Right now, at the top of this pipeline that we have is about $1 trillion of these types of transactions. If you do stupid math, Spencer, and say you can only take 5% of that to the bottom line, and you use a 20x multiple, which is what they're trading at, I mean, you're talking about a company that could possibly be, a $200 billion company. And so this is the kind of stuff that gets me super excited, and the kind of things that I like to look for in the private sector, because I know once they get into the public sector, giddy up.
Well, that's an interesting point that you bring up. I'm wondering. Obviously, you're a VC. You invest in private companies, but would you for a public markets investor, someone like me, for example, would you play fintech just via the big banks? I mean, we talked about how they're all doing acquisitions and partnerships now anyway. So is JP Morgan, is it Goldman Sachs? Is that a way just to play fintech? I mean, there are many other factors at play. There's not just like the fintech growth aspect when you invest in a traditional bulge bracket bank. But would you play it that way? Like, would you say, hey, I'm bullish fintech, and I'm gonna do that. I'm going to express that bullish point of view via, a couple of the major banks, or would you not do that?
No, I think it's a good idea. I think my portfolio construction would be broken up. I'd identify a couple of, who is the big player? Who's the 1,000-pound gorilla that is really, I mean, that they're going to be there come hell or high water, right? JP Morgan's a great example of a company like that. Largest bank. The largest bank headed by a very forward-thinking CEO, right? And if you follow Jamie Dimon at all, he's investing heavily into fintech. So that is a great way to play the space because they are an acquirer of these companies and they're going to be around for a long time. The other way to play this, and that's that diversification of the portfolio construction that I was talking about, is to find these earlier companies, right? Like a firm. Now it's public, but that doesn't necessarily mean that, and I'm going to say it again because it's a super important investment insight. What it is today will not be what it is 5 years from now. And you're buying into that insight, and you're buying into that notion that technology will just because it's public doesn't mean it can't be purchased by another organization. Doesn't mean that it can't acquire other companies to get even larger market share. So that's the way I would play it. I'd keep my eye on the private sector because that's where all these companies are coming from. That's your garden. So keep an eye on that. Keep an eye on the larger companies and ask yourself the questions, what kind of things do you anticipate? Again, you got to get on your horse and ride out into the future a little bit. If you're a consumer, what do you want from that organization? Start to think about that and just work your way down the ladder. And that's a great way to end up, you buy 4 or 5 or 6 different things that you think could apply, and you're going to do pretty well. In the fintech space also, Spencer, it's been doing this for a really long time. When I first got into the industry, I'm going to age myself here a bit, but in the late 90s, there was a mutual fund called John Hancock Regional Bank Fund. I've made more damn money investing in that fund than you can even shake a stick at. And really what was happening and what they did is this fund would just go around buying up these small regional banks because they knew that the larger banks would end up gobbling them up for market share. And it's the same principle today. What are the companies that are going to get purchased by these major banks? That's one way to play it, just as you said. And then what are the companies that you could purchase that you think can get acquired?
I would be remiss to mention the fact that there are a number of fintech ETFs out there. I just put together this list here. There are about 5 or 6 fintech-focused ETF. You all know Kathy Wood, ARKF, right? That's the big one. But FINX, here. Let's make it the Global X Fintech ETF. You got iPay, which is just a payments ETF. You've got another one, TPay. You've got a lending one, LEND. You got Coin, which is more of a crypto-focused ETF to the extent that those exist right now in the public markets. But you can also just play broadly via an ETF if that's something that, if you're wondering like how to get exposure to this trend. Jeff, how much of this of this theme, of this idea, is related to the strength of the consumer? Do you pay attention to that? Because there's a lot of talk about, the consumer is just flush with cash. The Fed says there's no inflation, but you look around and everything is more expensive. Homes, raw materials, whatever. How much of this theme is dependent on the strength of the consumer at large?
So how I look at this is the consumer is always going to consume. If you look at what we just came out of, and I know I live in Miami and I don't really think about COVID much anymore, but it's still relevant in a lot of places around the United States and elsewhere, especially outside of the United States. But you think about what has happened since COVID hit. These companies are thriving, right? And depending on what you read, there's people who have been laid off, there's people who are struggling, but people have to consume. The question here is for all of us as investors in the discussion at hand from a fintech play is, how do they want to consume, and what creators are going to create programs and companies to help us consume in a more efficient, effective way, the way that we want to do it. That's really at the end of the day what it is. People aren't going to stop consuming. So it's a great investment theme. It's never going to go away. And it's only going to get more exciting. And again, the tracks have already been laid and the technology is there, and more companies are going to be built off of those existing tracks.
I'm glad you brought up COVID. It's a very interesting situation. So obviously this is a different crisis entirely from the Great Recession, right? Different cause and everything. But the Great Recession, which is sort of the measuring stick we go back to when we look at economic contractions and market crashes, that gave birth really to what we now know as fintech. Right? Obviously, companies like PayPal were around before 2008, but that crash and the way it was, the way it basically centered around the financial industry in this country, sort of gave birth to a lot of the companies that we now know as huge players. Companies like Stripe and Robinhood. It was a direct response to that crash. Now this recession that I guess we're out of now, and market crash, which I also guess we're out of now, had a different origin, different source, but it's kind of the same idea. I do wonder what types of companies will be born out of the last year, because we saw the Great Recession basically lead to the creation of this industry, and we obviously it's too soon to know the answer, but I wonder if you have any thoughts on sort of the types of companies that really could if not be born, but really just explode in terms of growth as a direct result of the last year.
Well, I think we've mentioned a couple of them, Spence. I think TaxFile is a great example, right? If I'm locked down and I can't go anywhere, I'm forced to interact with the things that I have to get done through a technology platform, right? And I think that there was a lot of that during COVID. Think about it for a minute. There are a lot of people out there, our parents, maybe our grandparents, who still used to, before COVID, walk to the local, corner bank and make deposits and write checks. And, when COVID hit, they were no longer allowed to do that. Banks weren't open. Well, how the hell do you pay your bills? You are forced to figure out how to do online banking. You are forced to figure out how to deposit checks using your iPhone.
Yep.
So the existing technology that is there has only gotten stronger. And then when you talk about, what are the up and coming, a TaxFile like example is a prime example. A Recarga Pay is a prime example. Apple Pay, Uber Pay, all of these things are extremely relevant because COVID has forced us into new habits and new rituals. And I guarantee you, my humble opinion, there's no inflation numbers that are going to come out that's going to change those habits. This is here to stay. It's only going to get stronger.
Jeff, do you have any predictions for any of the companies we've talked about, whether it be an IPO that is an hour old in Coinbase, or a company like Visa, or anything? Do you have any predictions for fintech, or for any of the companies that you're either invested in, or on the private side or the public side, for the next few years?
Well, yeah, I think it's great. I got to be a little bit careful, as you know. But keep an eye. I've said this a number of times. Keep an eye out there, and you were kind enough for our audience to identify a few fintech-focused SPACs, and continue watching that. I would say every company that I spoke about that's inside of my venture capital fund is prime for acquisition. It's very possible that a few of those companies I've already spoken about have deals on the table now with term sheets from these larger organizations that you and I were talking about that are in need of acquisitions, or are currently looking at term sheets for SPAC sponsors to roll into the public markets. So my prediction is, there's a lot of people like me out there. Identify the venture capital firms that you have some, you like the thought process, you like the companies that they hold. Start looking at them. You can find all their portfolio companies on their websites, and just start, being a practitioner of the game. What are these companies doing? How are they doing it? These companies are created to be sold or to be rolled up into the public markets, period, end of discussion. That's why it's done. These aren't lifestyle companies that people want to build and 40 years from now, pass on to their grandkids. Those days are over.
Yeah, that's I agree. Nothing you said is, I think that hot of a take. Honestly, I think I agree with pretty much what you said. I've sort of had one eye during the course of this conversation. I've had one eye in that Coinbase chart, just for sheer curiosity's sake, and it is trading now down at about 350, 351 now. So, this is why they gave it the reference price of 250, right? Give it some leeway, give it some room to breathe, right? So that's what's happening here. It got the pop and the drop, at least as you compare it to the opening price. But this thing is 2 hours old. I'm just looking at it because I'm interested. But gotta remember to tune out the noise and not get sucked into minute charts, which I'm on right now, which I try. I make a habit of not looking at 1 minute charts, but I can't help it in this case.
But Spencer, it's an investor insight, and I don't even know if you recognize that you're doing it right. And it's something that I think our audience should be thinking about. The hype machine on these companies is also something for us to keep in mind.
Yeah, that's talk more.
Right, it is. I mean, look at this company right now. I mean, it is trading at $351 a share. Right, that is not a small amount of change. Right, that is a big number. And so, how is it that this is so high? Well, fundamentally speaking, it's a theme that a lot of people are fascinated about. Right, the digital currency, the world that we live in. COVID helped us with all of that, right? You can no longer kick the can down the street of innovation. You have to face off with it, because if you don't face off with it, you're going to be caught behind the 8 ball. And a lot of people found themselves like that in 2020, and they're not going to allow themselves to do it again. So that's a piece. The second piece is the hype. What are people saying? How many hits on social media channels are these people getting? Are the founders of these companies really becoming rock stars? These are all important investment themes, and it's going to determine if you can find one that gets picked up by a solid SPAC sponsor, it's going to do well, right? Yeah. And so, if you can get in early, it's probably smart, because it's probably going to run up if it's done right. If you have a solid SPAC manager, you have a solid, great company that has a lot of hype and a lot of attention, it's going to do well. You're going to make money.
And when you really talk about, and this is just brought up in the chat by Dan, is like a company like Apple, right? Apple Pay, which is with Goldman Sachs, right? I mean, you said everybody will be fintech, and Apple has it. Amazon has fintech. Almost every company has or will have fintech in some way, shape, or form.
That's exactly right.
Permeating every aspect of our lives. Sort of like how like every company is kind of a tech company now, right? Like every company will be a fintech company in a way. Whether it's payments, lending, whatever. It's becoming easier and easier for any company under the sun to be able to offer financial services, integrate them into their platform or whatever. So,
if you don't, you're probably not going to be around for very long. And that, I think, is the point that you and I are trying to make. You have to be able to compete. And if you can't, you won't be around, not in today's day and age when the end consumer is so demanding.
This is an interesting question from Kevin. And Jeff, I want to get your thoughts on this. He's asking, so, we've got a couple, we've got 3 cryptocurrency exchanges that are now public in the US in some way, shape, or form. eToro, Coinbase, Voyager. How would you go about trying to find the winner there? If let's say you were like, all right, I want to get a piece of the crypto exchange action in the public markets. How would you go about, answering that question?
What I would do is I would take the 3 companies, I'd lay them out, and I would start doing my due diligence, right? Okay. What market share do they have? What are their financials? What do they look like? And at the end of the day, I'm a value player, right? I want to try to find a company that I believe relative to the others is a value play. And again, I'm gonna seek out how that company's doing in the social world, right? I'm gonna go check out its Instagram. I'm gonna go check out its Twitter. I'm gonna go check out their LinkedIn page. I'm gonna look at their intellectual leadership writings. I'm going to try and figure out, who really has a good eye on the future, and try to understand which of those 3 provide me with the best value case. And then on the ones that I think have creeped up in value a little bit, I'm going to be looking at those companies and hoping that there's an emotional day in the marketplace and I can buy it on a dip. I mean, I think it was about a month ago you and I were talking about Apple, and I said buy Apple on a dip. And I said buy Apple on a dip because I think it's a very integrated company, right? Think about everything that we've been talking about, Spencer. We talked about music streaming, Apple has it. We've talked about fintech, Apple has it. We talk about technology in general. Apple is one of the, it's the king of the hill, right? So if you can buy an Apple on a dip, if you can buy, Coinbase on a dip, assuming it continues to be the industry leader here, I think that they're good opportunities to do so. So I hope that answers that question.
Yeah, and you said you would look at the financials last week. You said how much you love revenue growth. So I imagine that would be a big thing, right?
For me as a venture capitalist and wanting to invest in technology, and it is a really good, it's an incredible conversation that you and I could spend an hour on, and there's going to be a lot of people that would debate us. Yeah. But I don't need to see profit margins right out of the gate. I don't. I would rather see a Spotify continue to dominate its space, and then when it decides that it's the right time to turn on the profit machine, they do so. I've said this before, profit margin is bean counting. If you have the top line and you're any good at finance whatsoever, you should be able to generate the profit side. And you have to believe in the management team of the companies that you're investing in, or you shouldn't be investing in them in the first place. So everybody loves to beat the hell out of Uber. I sit back and laugh at it. It's like, if you don't think that these guys can do what they want to do when the time is right, then you shouldn't be talking about them anyway. It's
true. I totally forget all the time that, hey, there are real people running these companies, and some of them really know what they're doing. but that doesn't show up in the balance sheet, right? And that doesn't show up on the table. So it's easy to forget.
Spencer, they don't state on the balance sheet and on the income statement the incentive programs for those CEOs to get to that profit margin, but it's in the future, and you've got to understand that these people are motivated. They don't get up out of bed in the morning for free. They are getting up out of bed in the morning. They're working 120 hours a week. They're getting beat the hell out of because they know what's in front of them, and the carrot is really, really big.
Yeah. All right, Jeff, before we let you go, we talked about Curve, talked about Tax File, and we had mentioned before you came on that you had an offer or two, and I don't remember what those offers were. So I want you to.
Yeah. So all of our listeners who haven't experienced Tax File and would like to get it done, if you haven't done your taxes so far this year, go to www.taxfile.com. And you can go in there and get yourself set up on the Tax File app. And in the code, enter Benzinga VC20. So BENZINGA VC20. And you'll get a $20 discount at the checkout. So that's a cool one, and it'll get you exposed to Tax File. And once you use it, you'll probably never not use it. And then on Curve, if you go to curve.com, we're going to be launching in the United States in the third quarter of this year. You can put your name down on the wait list, and we'll make sure that you get a card. And Spence, I'm going to be getting you a card actually before we even go live in the United States, my friend.
Oh, I'm like a credit card junkie and a personal finance junkie anyway, so that would be great because I'm like
done.
And I got it from my dad. I guess it's called skimming, right? Where you like just play the cards for the rewards. My dad, you should see like my dad's spreadsheet. He's got like 50 credit cards, and he's always opening. He's doing the arbitrage. He's opening and closing and opening and closing. And this is one card to really. So, all right, I'm going to check that out. And I threw the link up to Curve on the screen. Taxfile.com promo code is on the screen. Benzinga VC20. Jeff, I very much look forward to that. That would be fun for me to demo that.
Yeah, we'll get one for your father as well. And brother, I think spring is there. I hope you don't have to wear the sweaters for very much longer. And as always, have a legendary rest of your day, my friend.
Wait, real fast. Does Tax File work in Canada? Question from KHH.
Does it work in Canada? It does not work in Canada as of right now.
Okay, there we go.
But you can. Yeah. Yep.
All right, Jeff Ransdell, Fuel Venture Capital. Handle up on the screen for Instagram, for Twitter at Jeff Ransdell VC. His firm is at Fuel VC, Fuel Venture Capital. Jeff Ransdell, thank you so much. Always a pleasure. We will talk to you in a couple of weeks, and you have a legendary day.
Love you. Be well.
All right. God, I love how he says that. Have a legendary day. I said I was going to start saying that, and I haven't, but I'm going to start saying have a legendary day. You know, it's like it's like the most fun thing to say. Rohan, producer Rohan, are you having a legendary day today?
Yeah. One sec. You can only see my hand here. Let me zoom out. I am, in fact, having a legendary day. Thank you, Spencer.
Awesome.
What an awesome show with Jeff Ransdell, VC. Coming up next, we have an awesome show with two very familiar faces, maybe a third one. In fact, it is the faces of myself and you. For First Trade, episode 8.
Wait, and actually there was a question in chat that Kevin Greer asked. Like, he was like, there's all these crypto exchanges. How do I pick the best one? I answered that question on First Trade coming up next. I answered it indirectly. I wasn't referring to crypto exchanges specifically, but I was referring to the concept of picking a winner versus not picking a winner and picking all of them. And that's kind of that's my point. So that's my whole point. I hope it didn't get cut out of the episode because I know they had to cut some of my stuff out because I rambled on long. But I'm looking forward to. It's not very often that I'm on the other end of the interviewing process, so I'm looking forward to it.
There we go. Boom. Question answered next. I threw it in there, but I'll hit it again.
Very nice.
Nice. But yeah, I'm excited for this one. This episode, this is normally when we do the ETF show. And guess what? This episode of First Trade is all about ETFs, folks. Why you need to get in on it and just all the details of that. So, folks, make sure you stay on the stream. It will transfer over to First Trade in we got like 3 minutes to kill here.
And I have some housekeeping items that I want to get to. So, first, if you haven't seen, Benzinga has a new YouTube channel.
Yes, sir.
It's not called Benzinga Briefs. That was a short-lived experiment, I think. Well, it's called Benzinga Clips, and it's where we're posting all of our highlights. So no live videos, No hour-long, 2-hour-long streams, just short 2 to 5 minute videos.
Under 10 minutes. Under 10 minutes. That's what the channel is.
Under 10-minute videos of all of our shows. If you don't got time to watch a whole stream, that's okay. The Benzinga Clips channel is the channel for you.
Yes, sir.
One easy way to kill two birds with one stone and subscribe to our channel while also trying to win $100 of Benzinga swag.
Whoa.
By clicking on the link I just put in the chat. That's a link to our weekly swag giveaway. This week is through Pre-Market Prep. You can enter by subscribing to this channel, by subscribing to Benzinga Clips, by tweeting about it, and by entering the secret code, which I gave away this morning and will not give away again until next morning, tomorrow. So, all right, there is the swag contest. Smash the like, guys, for Jeff. That was a fantastic interview. Super long form. I love the long form stuff. Gives us time to really get into the weeds of these ideas and these subjects. So smash the like for Jeff. He'll be back on in a couple of weeks here. We're going to do this thing every other week, I think. And
Cal, in the comments, will you be able to find Jeff's interview in clips? You won't find the whole thing, but you certainly will find a clip or two from there.
So this whole interview, I'm going to end this stream right now. And when I end the stream, this whole video will be available on Benzinga. There will be snippets of this interview on clips, but if you want to watch the whole thing, it'll just be on the main Benzinga channel, and the video will be uploaded instantaneously as soon as I end the stream, which I'm going to do right now. And then for those watching right now, it'll redirect you to First Trade, which is about to premiere. Is that right, Rohan?
Exactly. That is correct. And Brad Moore, where is clips? Two things. If you click on the Benzinga channel, it'll be right there as a featured channel, as another Benzinga channel. And obviously in that link to win up to $100 of swag in the Gleam giveaway, that is one of the first requirements to subscribe to the Benzinga Clips channel. So something for you as well. You go there and find the channel that way. Boom, you get a chance to win some swag.
Wait, I'm stupid. Can you walk me through this? Hold on. Wait, I'm dumb. I'm going to share my screen and I want you to. So here, I'm on the main Benzinga channel.
All right, scroll down just a little bit.
Okay. Oh, there it is. Look,
right there, Benzinga channels.
Guys, it's right there. I'm not even subscribed. Oh, yes, I am. Okay. It's right there on the damn channel. It's there.
Right there. And we're at what? What is that? 227? The goal is to get to 3,000 subscribers by Friday. So you guys want to help us out, get that done. We all like to keep our jobs over here. So Benzinga Clips, want to make sure you're getting all the Benzinga content. And we want to optimize both channels. So this is how we're doing it.
People were like, you guys post too much. We were like, you know what, people, you're right. We do. So let's change that.
Absolutely. So, all right, folks.
All right.
Is it time for First Trade?
Rohan, start the stream up. I'm going to end this. How's it going to work?
I'm going to go ahead and hit the countdown and hit go live on the other stream. So First Trade will be going live now. And we are going to go ahead and end this broadcast. And folks, you will be ported right over.
Who's doing the ending? Me or you? Is it me?